Every crash, every fortune, every broken dream in finance begins with one mistake. People don't know the difference between investment and speculation. These two words sound similar, but they divide those who build wealth from those who burn it. In the next few minutes, you'll see why that line is razor thin, how most people cross it without knowing, and how mastering this distinction can change your financial destiny forever. So, what is investment? It's the art of understanding. Investment is the process of putting capital into something that creates value over time. It's guided by analysis, protected by discipline, and measured by patience. You invest to participate in growth, to own a share of productivity, innovation, or human need. When you invest, you don't predict the future. You partner with it. You trust math, models, and management. You earn not because of motion, but because of meaning. The legendary Benjamin Graham called it an operation which, upon thorough analysis, promises safety of principal and a satisfactory return. Anything else, he said, is speculation. Now, what about speculation? It's the addiction to excitement. Speculation is essentially emotion dressed up as logic. It's the act of buying something not because it's valuable, but because you hope someone else will buy it for a higher price. It's momentum, not merit. Noise, not knowledge. Speculators live on short-term hope, not long-term proof. They crave speed, volatility, and the thrill of the game. While investors sleep soundly, speculators are up at night, refreshing their charts. Speculation isn't inherently evil, it's a natural part of every market. But when you mistake it for investing, it becomes a dangerous form of financial self-deception. The difference really comes down to psychology. Investment comes from confidence. Speculation comes from insecurity. Investors need time. Speculators need constant attention. Investors manage risk. Speculators chase relief from their anxieties. An investor asks, what is this asset truly worth? A speculator asks, what will other people pay for it tomorrow? This is why markets rise on hope and fall on fear, because both are deeply human emotions. The line between financial wisdom and gambling isn't drawn on price charts. It's drawn inside your own mind. If we look back through history, we see a brief history of human speculation. From the Dutch tulip mania of 1637 to the dot-com bubble of the late 90s and the recent crypto booms, the pattern never changes. Something new and exciting appears. A small group understands it. A larger group copies them. Then, suddenly, everyone believes they're early to the party, right, until they find out they're the last ones to arrive. In every single era, people say, this time is different. But human nature isn't. Every bubble begins with genuine innovation, but ends in widespread imitation. So why do we love speculation so much? It's because speculation feeds our brain's reward system. It's fast, it's social, it's exciting. It turns the invisible, uncertain future into visible, tangible charts that go up and down. The problem? It rewards emotion more than education. It feels like you're winning even when you're actually losing until reality sends you the bill. That's why most people lose money not in the markets themselves, but in their mindset. They don't study companies. They study screens. They don't invest in solid ideas. They invest in their own impulses. This brings us to why investors win the long game. Investors accept that boredom can be a strategy. They understand that compounding is invisible for years until it suddenly becomes unstoppable. They don't need to trade daily because their assets are working for them daily. When the market crashes, speculators panic and sell. Investors see an opportunity and buy. When the noise from the crowd gets louder, investors focus on what truly matters. They know that time and patience are far more powerful than market timing and prediction. In short, speculation plays the game of moments. Investment plays the game of decades. In reality, most of us live in a gray zone. Everyone does a bit of both. Even professional investors speculate occasionally when data is uncertain or an opportunity feels too urgent to ignore. The key is self-awareness. Before you make any trade, ask yourself, am I buying value or am I buying hope? Do I truly understand this business or am I just gambling on emotion? And the most important question, if the market closed for 5 years, would I still be comfortable holding this? If the answer is yes, you're investing. If it's no, you're speculating. These are simple questions, but they separate the builders from the dreamers. So how can you start to think like an investor? First, study before you spend. Read company reports, not online rumors. Seek clarity, not excitement. And remember, if it sounds too good to be true, it probably is. Focus on your process, not on predicting the future. The goal is consistent logic, not lucky timing. Diversify intelligently. Speculators diversify across different dreams. Investors diversify across different realities. And finally, measure your risk, not just the potential reward. The upside often takes care of itself if you protect yourself from the downside. An investor's greatest edge isn't intelligence, it's emotional discipline. What does the future of speculation look like? In the age of social media, everyone's a speculator. Information moves faster than our ability to reflect on it. A single tweet can move billions of dollars. Artificial intelligence will make markets more efficient, but it won't make humans more patient. The more automated the world becomes, the more valuable your temperament will be. In the long run, your calm mind will outperform any algorithm. Investment and speculation are not enemies. They are reflections of each other. One builds wealth slowly. The other burns through it quickly. One turns wealth into a legacy. The other turns emotion into a distant memory. In every trade you make, you're choosing who you are, a builder of value or a believer in chance. Choose understanding, choose time. Because in the end, speculation ends when the excitement fades, but investment keeps paying. Thanks so much for watching. If you found this helpful, please hit that like button and subscribe to Fawn PSF for more content to help you on your financial journey. See you in the next one.